So both the Nasdaq and the SP 500 put an end to their 3-day losing streaks on the day. So what does that mean for us as investors? Is it blue skies from here? We're going to finish off the year at all-time highs. All of that to come and more. Welcome back to the channel. Now, before we begin, I gotta let you know this is not financial advice. My aim is to ensure you are well informed about these markets on a daily basis, not missing out on any of these details. So when you're out there making moves, you're well informed. Now, before we get cracking, if you're new to the channel, make sure you hit that subscribe button, hit that notification bell to join the movement. With that being said, let us get started. So let's kick things off by talking about Apple, because over the last 24 hours, a non-official report has come out saying they're going to be cutting their iPhone 13 production numbers by 10 million units. This is because of supply chain issues. They're unable to get all the components that they need from their suppliers, like a Broadcom that focuses on the wireless, or like a Texas Instruments that focuses on the screens. So firstly, let's talk about these supply chain issues, then talk about the magnitude of this impact on Apple's business, and then the Apple stock itself. Now, it's important for us to know this isn't an Apple exclusive issue. This is being felt by corporations worldwide. These supply chain issues that have been ongoing for the entire length of this whole year. Now, with Apple, they're having the dual effect on their business, because on one hand, they have factories in Vietnam. Now, over the last couple of months, there's been virus outbreaks and there's been closures of these factories, okay? Meaning that the production has slowed down. They're not able to get all the components, all the parts they need from Vietnam. Now, most of these companies that have a lot of exposure to Vietnam, whether it's Crocs, whether it's Under Armour, will be feeling the crunch. Same thing we saw with Nike, and we saw how their earnings came out. They missed numbers, post up weaker guidance because of the factory closures in Vietnam. Now, another thing to note is that a lot of these Vietnam workers have left the city to go to the countryside. Given these factories have been closed, they've relocated temporarily. So that's just another logistical hurdle for everybody to get back over. So even when these factory lights are back on again, it's going to take some time for everything to get back up to full steam, because you're going to need to get the right people in the right places. Now, on the other side, Apple also have suppliers based in China, and over the last couple of months, there have been electricity shortages in China, causing factory closures over there as well. So what is happening is the candle is burning from both ends, and they are feeling the supply crunch. So it's no surprise there has been that unofficial report that came out saying that they're going to be cutting their iPhone 13 numbers by 10 million units. Now, let's talk about the magnitude of this effect, right? Because iPhone 13s go for $1,000 a pop, and at 10 million units, that's 10 billion in delayed revenue. Now, Apple did about 80 billion in revenue in their last quarter result. So 10 billion is no small number, right? Just over 10% of that amount. It's not something you could just slide under the carpet. If it was 1 billion, maybe it could be overlooked, but 10 billion being almost 10% of that last quarter, right, that is a significant amount. But one thing for us to note is that Apple, over the last couple of decades, have built up phenomenal brand loyalty, right? Their customer base is very, very sticky. So iPhone 12 users, just because they can't get their hands on the 13 doesn't mean they're going to be in a hurry to go and switch over to a Samsung phone or a Nokia or even a Doogie phone. Now, what has happened over history is that when Apple has lapses in their production, their growth of their iPhones, what normally happens is the following quarters, they make up for that and more. And that is exactly what we saw in 2020 when the numbers came down, given the pandemic. What then happened was that pent up demand. You saw explosive growth in their numbers, and it's looking like history could probably repeat itself again with the iPhone 13, especially given the strong levels of pre-order numbers that we have seen, all right? China pre-order numbers standing at 2 million, even better than the 1.5 million that was seen for the iPhone 12. Now, the Apple stock has been on a downtrend ever since the beginning of September, in line with other mega cap tech companies like a Facebook, for example. Now, Apple has been sliding down, one due to rising bond yields, another due to slowing growth in China, where a large majority of their sales take place, and another is these ongoing supply constraints, which is felt by corporations worldwide. Now, if you're interested in Apple, they have strong support at $136. $25, right? That is the low end of the trend line that we've seen over the last year, that they haven't dropped below. It's held firm, as I say, over the last year. Now, if Apple are going to trend down to that mark, $136, it's either going to happen at the back end of this month or the very beginning of next month. Now, Apple is not going to go down without a fight, because what we're seeing is downwards pressure is being met with upwards pressure. Now let's talk about earnings season, because it's full steam ahead with the financial stocks on this week. Now you guys would have seen different pockets of these markets today performing very well, and I believe it's the strength of the financials earnings that we've seen on the day that's added fuel to the fire in these markets. Now earnings season can tell you a ton of information about economic strength, economic weaknesses that you can use to your advantage, and none better than financials earnings. This is because these financial companies, they serve the businesses as well as the consumers directly. Now, in addition to JP Morgan's good results from yesterday, we've had Wells Fargo, Morgan Stanley, Citi, and Bank of America come out, deliver great results, beat estimates by a great margin on the day. Now, a lot of these banks were fueled by their M&A, mergers and acquisitions activity. This is just the buying and selling of companies. So year on year, JP Morgan, 50% increase, Bank of America, 65% increase, Morgan Stanley, 67% increase. All right, so that was fueling their earnings. Very powerful division for these banks. So that means that the corporations, the companies that you guys go to, you eat from, you buy from, are doing very well right now. So that gives you an indication and insight into economic growth and business strength. All right, it's doing well at the moment. That is why we're seeing a lot of selling and buying activity for these businesses. Now, loan growth, which is just the amount of loans that consumers and businesses are taking from these banks, has been a lagging area over the last couple of quarters. Understandably so. This is because we've had a lot of government stimulus, a lot of money pumped into these markets, meaning that these individuals as well as these businesses haven't had a need to go to the banks as much to take out loans. But now we might be going through a transition, as we're seeing a lot of that stimulus now being pulled back, a lot of it being stopped. So the consensus is over the next couple of quarters, the loan growth element of the earnings of the banks is set to increase. Now we're seeing that feed through with companies like Bank of America. So that is feeding through at the moment. And it could be the case that the other banks also see that type of transition within their businesses over the next couple of quarters. Now, with the banking stocks, they still remain some of the lowest price to earnings multiple companies, lowest price to earnings industries within the SP 500. This could mean they have room to move up over the next couple of quarters if they continue to outperform. Okay, so if their capital markets divisions, where the M&A sits, continues to perform well, we see that buying and selling activity within businesses. If consumers and businesses continue to take out loans at an increased pace, or if we see an increase in interest rates as well, these financial companies could outperform, could continue to do well. So they are ones to keep an eye on. Now, I'm talking to you guys about the price action we saw on the day, right? So they all delivered knockout earnings, but we saw a dip in the morning. This is because right now the market is on the back foot. What is happening is the market is waiting for others to react and move. So when others start reacting and moving, when the price starts to move up, then the rest of the market follows. Okay, that's why some of these banks, like a Bank of America, closed out strong on the day. Bank of America had phenomenal results. Okay, one of the most standout out of the collection of the banking stocks. This is because, as well as having phenomenal M&A, mergers and acquisitions results, as well as having good loan growth in there, they also were able to manage their costs. Now, one of the biggest sticking points over these financial companies, as well as the rest of the market, is inflationary pressures. Okay. So let's talk about the overall market, because today we've seen a major move, and that is the SP 500 has broken above its top line trend, and right now it's sitting above its 50-day moving average. So if you own one single share out there in the markets, there's positive signs for you, because, and I put emphasis on this, if we can stay above this trend mark, we might just avoid a deeper correction in these markets, but it's all contingent on staying above trend. Now, as we continue to go through earnings season, and as earnings are rolled out from companies within the big tech, within the industrials, consumer, energy, I'm expecting positive earnings across the board as we've seen so far. And what the market is doing is reacting positively. So good earnings equal good stock price movement. So if this were to be the case, there's no need for a massive deeper correction from where we're currently at in these markets. Now, this week was a big one for inflation numbers. Yesterday, we got the CPI, the Consumer Price Index. That was an increase of 0.5% month on month, and over the year, it was about 5%. Now, today, we got the Producer Price Index numbers, and this was also about 0.5% month on month. Over the year, it was closer to 10%. Now, today, the markets haven't reacted to the inflation numbers. But given the persistent levels of inflation, this could impede growth, okay? Because on the consumer side, what you're doing is you're reducing their spending power. On the business side, you're causing margins to shrink. That could lead to less investment, less fuel to continue growing their business, and other issues as well as that. So this is a theme that I expect to re-enter into these markets, because the way things are going, you could continue to see energy prices increase, oil prices increase because of the very high levels of demand. We're not yet at peak season, and the supply constraints as well. So that's going to be a big driver of inflation over the next month. So that's one we'll see in the numbers for October. So this is something to bear in mind. And the Fed have reacted to this, and they are suggesting that tapering might begin middle of November or even December. Now, this should act as a way to try and ease the levels of inflation we're seeing, as well as manage the treasury debt that they have on their balance sheet. So these are things for you guys to be mindful of as you're making moves in the markets. All right, guys, so that wraps up for this one. Now, if you want to get up on the moves and the plays that we make, ensure that you hit that top link in this video description, tap into the Discord, get up on the stock moves and the option moves that we make pretty much every single day. On your way out, make sure you guys hit that like button for me. If you're new, join the movement by hitting that subscribe, and I'll catch you guys in the next one.